What's up? What's up? About to go live in a quick minute. In about 30 seconds. We'll be talking about the tax credits and deductions. Let me go ahead and flip this over for you. Mirror mode. Nice. Welcome. I'm going to cover the tax credits and deductions. I've been practicing. Let me erase this. Guys, if you're just joining, tell me where you're from. Tell me what you do. I'm always interested in that. And we're live. We're live. Yeah, guys. If you're just joining, hi everybody. Tell me where you're from. Tell me what you do. This is my first time using. I'm on Instagram Live as well. Can you flip it? Probably not. New York. Hey, someone say Dallas? What's up? I'm from Dallas as well. West Virginia. I just didn't know how. What the heck? Sorry, guys. I just need to know how I buy a car with my LLC. You don't need an LLC to buy a car, especially for business. You can buy it on your personal name. What's up, West Virginia? What's up, Dallas? I'm from Dallas. West Virginia, New York. Nice. I'm a server. Nice. Where you serve at? Originally from Birmingham, Alabama. Currently in the Navy down in Florida. Nice. I just purchased my LLC like a month ago. Nice. So you just register with the state. More money. Nice, guys. Awesome. Oh, sweet. I have my first. Hey, guys. Hey, Josue. I'm on Instagram Live. I'm on TikTok Live. And I'm also on the Facebook Live. Guys, hi. My name is Duke. I am an advanced QuickBooks Pro advisor. I am an enrolled agent. And I'm also an entrepreneur, small business owner, just like most of you guys watching this. So this part of my day, Monday through Thursday, I go live. Starting at 8 p.m. Central Time, and I do this for you guys. I go live for you guys to answer your questions, to cover some topics, to help you really just stress less about taxes. So I'm live on TikTok, I'm live on Instagram, and I'm also live on Facebook. If you miss any of this live, I'm going to repost it on YouTube, or hopefully it'll be on Instagram. Now, I'm going to be drawing on this board. I know I haven't mirrored on TikTok, but I'm not sure if TikTok allows me to do it. But tonight, what I'm going to cover with you guys is pretty much the difference between tax credits and tax deductions. I'll do my best to make it brief so we can jump into questions and we can get on about our day. So first, let's start with a tax credit. Okay? So guys, listen. A tax credit reduces the amount of taxes you owe to the IRS. Okay? So, let's say the IRS says you owe $1,000. Bam! IRS comes up, hey man, can you give me $1,000? Right? Maybe you ain't got it. Maybe you ain't got the $1,000. But maybe you got a tax credit. So let's say you also have a tax credit of $1,000. So if you have a tax credit of $1,000, well, you paid your tax credit with that, and now you owe $0 in taxes. So this is how a tax credit works. A tax credit goes directly against the amount of taxes that you owe or that you would pay. Okay? Now, there's two different types of tax credits, right? We have the refundable tax credit and we have the non-refundable tax credit. Okay? So let me just show you the differences, okay? So right here, this is what the IRS says we owe. Right? IRS owe. Right? And this is our tax credit. And then this is our new balance. Okay? So if you're just joining, I just put labels. So this is what the IRS says we owe. This is our tax credit. And this is going to be our new balance. Guys, on Instagram, I'm sorry, it's my first time on Instagram. It's not letting me flip it or mirror it. So I'm also live on TikTok as well. Okay? So now let's talk about the difference between a refundable tax credit and a non-refundable tax credit, okay? So let's say the IRS says we owe $1,000. Let's say we owe $1,000. Cool, all right? Maybe we ain't got $1,000, but we got tax credits. Hey, let's use those, okay? So let's say this time instead of $1,000 tax credit, we have a $2,000 tax credit, okay? The IRS says we owe $1,000, but we have a $2,000 tax credit. Well, if we take 1,000 minus 2,000, that leaves us with negative $1,000. Anytime your balance is negative with the IRS, that's a good sign that you overpaid the IRS and that you should be issued a refund. Okay, so anytime this number is negative, it's a good indicator that you overpaid the IRS and you should be issued a refund. But we have to look at what caused you to go negative. And you only went negative because of the tax credit. Now remember, there's two types of tax credits. There's a refundable and non-refundable tax credit. So if this is a non-refundable tax credit, well, guess what? You don't get this $1,000. You don't. It just reduces it to zero, and that's it. Now, if this is a refundable tax credit, you'll get that $1,000 as a refund check or additional refund to your money. So a good example of a refundable tax credit would be like the child tax credit. So guys, if you have kids, right, and you can, I get a baby. Yeah, that's a refundable tax credit. That generally increases your refund. Okay, another refundable tax credit is the earned income tax credit. Is it true that if you get a refund, you don't know how to manage? That is absolutely not true. That was a great question. Guys, if you are getting a tax refund, that is no indicator of how you manage your money at all. Stop letting, and I just wish that sometimes like everybody could just hear my voice. And it's just so sad that, there's people out there saying, if you let the IRS hold to your money, that's really bad. Yeah, they're holding your money interest free. Oh, shut up, right? Shut up. Just shut up. This flow, don't stress about that. If you're getting a refund, that is nothing wrong. It really, guys, it really determines what do you want, right? Do you want a refund? That's what really matters. So that was a great question. Sorry, my live on Instagram went down. Okay, I got it. So once a year, I got my tax responsibility to zero. It was like, yeah, and if you want your tax bill down to zero, you can. It's really, guys, what you want, right? If you want a refund, get a refund. There's nothing wrong with getting a refund. If you want your bill at zero, you probably need to work with a tax professional and probably incorporate tax planning, but there's nothing wrong with that. Yeah, I'll talk about the tax brackets next. So these are the tax credits. If this makes sense so far how tax credits work, give me a thumbs up or give me some type of emoji. Thanks for the follow, the cleaning. Answer my question. Yeah, I'll answer your question. But if this has made sense so far, yeah. The Shopify report to the IRS. Thanks for the thumbs up. If you do over 200 sales, or you process more than 200 sales, and you process more than $20,000 in credit card payments, the Shopify is required to report it to the IRS, and you're gonna get a 1099-K by January 31st. Okay, so we got some emojis so far. So we got some emojis on Instagram Live, and I'm so sorry, Instagram, it's not letting me flip it or mirror it, so I really apologize. Okay, so this has made sense so far, so we're gonna jump into the deductions. Now, what's a deduction? Okay, so remember, tax credit goes against your bill directly, right? And then, now let's talk about the, damn, I'm gonna go to jail. You be okay. If you need help, just send me a message. Guys, anytime you're like, oh my God, I need help, send me a message. I got you. Now let's talk about tax deductions. So a tax deduction, a tax deduction reduces your taxable income. Okay, it reduces the amount of income that you're paid taxes on. Okay, so let's get an example. So let's say you made $50,000. You made $50,000. Okay, and then you got a tax deduction. Okay, actually, let's say you made $50,000, and let's look at your taxes, right? So if you made $50,000 taxes, and let's say you're in the 20% tax bracket. Okay, $50,000, you're in a 20% tax bracket. Okay, well we take 20% of 50,000, 50, 1, 2, 3 times 0.2, 10,000. So 20% of 50,000 is 10,000. Okay? So without any tax deductions, without any tax credits, if we're in the 20% tax bracket and we make $50,000, right? I'm going to put balance down here. All right? We're in the 20%. Our balance is $10,000. Okay? That's our balance. Tax balance. Tax balance. That's our tax balance. Okay? So now let's throw in a deduction. Okay? So let's say we have a $20,000 deduction. We find a bunch of deductions. What's up, Jackson? Let's say we find a bunch of deductions. All right. Let's say they're for $20,000. So let's say we get a $20,000 deduction. 20, 1, 2, 3. Right. So now our new income is $30,000. Right? Now our new income is $30,000. So we're not paying taxes on the $50,000 no more. So guys, you don't pay taxes when we're talking about deductions, especially in business. You don't pay taxes on the top number. You don't pay taxes on your total sales. You pay taxes on the net income. So minus deductions. So now we're paying 20% of this, right? 20% of that, which is $6,000. 6,000. Yeah, make sure I have that. 6,000. Okay? So that's how tax deductions work. So tax deductions reduce the amount of taxable income that you're taxed on, and tax credits reduce the amount of actual taxes you owe. Okay? So if I were to use this example one more time, and then I'm about to just do this one more time, and then we can get into the questions. So you see how we got a $20,000 deduction, but it only saved us. It saved us only $4,000 in taxes, right? Because we went from 10 to 6. Okay, we went from 10 to 6, so we only saved $4,000 in taxes. Now, if we were to go back to the tax credit, let's say we go back to the tax credit, right? So let's erase all of this. Let's erase all of this, all right? So this is what a tax deduction, we're at 20%. So without any tax credits, without any tax deductions, we're at 20%. So we're at 10,000. Now I just gave you an example with a $20,000 deduction, $20K deduction. Okay? Now let's say we had a $20,000 tax credit. A $20,000 tax credit, right? So it's if we had a $20,000 tax credit, it's gonna go right here, right? Deductions go right here. Deductions, credits. So if we had a $20,000 tax credit minus 20, we had a $20,000 tax credit and we only owe $10,000. Got it? We have a $20,000 tax credit and we only owe $10,000. Boom. 1, 2, 3. That leaves us with negative $10,000. That means we overpaid in taxes by $10,000, depending if that credit is refundable or not. So you see the main difference between a tax deduction and tax credit is deductions go to the income and credits go to the bottom line. Any questions on that? And I'm about to jump into these questions. What's up, Scorpion? What's up, Richard? How about if we receive a settlement check while on a settlement check for if you receive a settlement check, you're probably gonna have to report it as other income on Schedule 1. I'm in Massachusetts. I need to hire you. Please send me a message, and we can definitely walk through that. Go to the link. Go to the link in my bio. You can go do it right now. I'll still be here when you get back. Hopefully. Yeah. Go to the link in my bio, right? And it says hire me. There's gonna be a little tax application you can fill out. It just helps me to understand if it will be a good fit or not before we jump on the phone call. Yeah, just fill out that tax application and I'll be happy to help you. How do you get a tax credit? What are the requirements? So you can actually go to the irs.gov website and it's like search for tax credits. And it'll give you a list of all the tax credits they have. But a common tax credits are like the American Opportunity Credit, the Earned Income Tax Credit, and the Child Tax Credit. Those are kind of really popular tax credits. But most of you guys, and especially if you're watching this and you have a business, that's most of them. Can I hire you? Oh, sweet, absolutely, absolutely, Kay. Go to I think it's on my Instagram link. Go to the link in my bio and click where it says hire me, and it's gonna be like a quick little application you can fill out. It'll help us decide if we'll be a good fit or not. Ambitious Butterfly, how do deductions work again? I missed it. So deductions. Okay. So deductions. All right. So let me just say it like this. Right? Let me say it like this. Okay. So let's say we have $20,000. $20,000. One way it could be a deduction, and one way it could be a credit. Okay. So $20,000. One way it could be a deduction. One way it could be a credit. Let's look at the deduction first. Okay. So if it's a deduction, okay. So if we have so we have 50,000, right? This $50,000 is our income. Okay. The $50,000 is our income. Let me fix this a little bit. The $50,000 is our income, and it's gonna be the same over here. Okay. So, just by looking at this, let's say we're in the, 20% tax bracket. Okay, we're in the 20% tax bracket. Okay, without any deductions, without any credits, without any deductions, without any credits, the taxes that we will owe, right? Taxes owed. Is going to be 2 times 5, which is $10,000. Right? taxes owed on this side is also going to be $10,000. Okay. So guys, if you're just joining, I'm walking over the difference between a deduction and a credit. Let's say we have $20,000 on this side. On what it looks like on a deduction. On this side, if it's a credit. And guys, I'm really sorry on Instagram. It's like mirrored and I can't fix it. I don't know why, but float with me. Okay. So if we get a $20,000 deduction, it reduces our taxable income. It reduces our taxable income. So let me show you what it looks like on this side. So if we get a $20,000 deduction, that's minus 20. And now we only pay taxes on the 30. Right? Now we only pay taxes on the 30. So 20% of 30,000, our new balance. Our new balance is what? 6,000. Okay? So our savings is 4,000. Okay? Does that make sense? If the deduction part makes sense, kind of give me a thumbs up. Give me some type of emoji if that makes sense if that makes sense what a $20,000 deduction does. If that makes sense, give me some type of emoji. So we have $20,000 right here. It reduces our income. Okay, thank you, Kenzie. It makes sense. Okay, got it. Instagram, does it make sense? Just give me some type of thumbs up. That way I can move on to what it looks like when it's a credit. Make sense? Okay, cool. Awesome. So that's how it works if it's a deduction. Okay, thank you, Ambitious Butterfly. Thank you. Okay. Thank you, The Cleaning. Thank you, Boys. Okay, got it. Jackson, thank you. All right, makes sense. Cool. So now let's look at it when it's a credit. Got press. Well, got press. Let me know why it doesn't make sense. Ask me a question. I'm gonna follow up with you. But you just joined the live. Well, shit. Watch. I'm gonna play the replay on YouTube. Let's jump into the credit. Okay. So if we have a tax credit, it goes directly to the amount of taxes we owe. Directly. So it doesn't even go in this area. You see what the deduction, it goes right into this area. The tax credit goes directly to the taxes we already owe. All right. So if we have a $20,000 tax credit, it goes straight down here. It subtracts right here. So we have minus. So we owe 10,000. Now it's minus 20,000. Right? We owe 10,000 minus 20,000. Our new balance is negative 10,000. Our new balance is negative 10,000. Savings. Okay, savings of 20,000. Okay. That's how the tax credit works. And anytime you have a negative balance with the IRS, that means you are due a refund. It's as simple like that. It means you overpaid. And there's nothing wrong with overpaying. But I have to mention to you guys that there are two types of tax credits, okay? There are two types of tax credits. Hey, yeah, exactly. So a tax credit is better. But wait, there are two types of tax credits. You have a refundable tax credit and you have a non-refundable tax credit. What does that mean? Okay. So if you have a non-refundable tax credit, it means it cannot give you a refund, right? So in this example, where you see we have this negative 10,000 right here, we have this negative 10,000. That would generally give us a refund. But since that negative $10,000 was generated from a tax credit, a non-refundable tax credit, we do not get that refund. But if that negative 10,000 was because of a refundable tax credit, we'll get that 10,000. So when you're looking up your tax credits, and guys, if you want to know your tax credit, just go to irs.gov, type in tax credits, and it'll all come up. You want to make sure you're looking at or taking advantage of your refundable tax credit. That's how you get money in your pocket. Common refundable tax credits are like the earned income tax credit, the child tax credit. Yeah. What are examples of deductions? The best examples of deductions are, sorry, I got a constipated sneeze and it's not coming out. My nose, it's not coming out. Examples of deductions. The main one is business deductions. So if you have a business deductions. Also, if you don't have a business, your itemized deductions. So that'd be like your property taxes, your real estate taxes. That's if you don't have a business. But if the main way, and Ambitious, do you have a business, by the way? Let me know if you have a business or not. Love this. Thank you so much. Yeah, you thank you very generously. I'm so happy. Yeah, guys, I'm just here to help you guys. I know you guys have so many questions. There's so many misinformation out there. And I'm just here to provide this information for you. I'm going to be honest with you, I don't know everything. So if you guys ask a question I don't know, I'm going to just say straight up and down, I don't know, but I'm going to write it down and I'll get back to you. Thank you so much for the gifts, Tiffany. Thank you. Okay, Ambitious, you have a business. So any expense that you incur in your business that helps you make money, it's more than likely a deduction. Ambitious, also, do you have bookkeeping? Answer that. Do you have bookkeeping? Thank you so much for your knowledge. Thank you so much. How did you learn all this? I own a tax firm. Thank you for that love. I do have a business. Okay, you guys have business. Okay, both of you guys have business. Yeah, if you have bookkeeping, and hopefully, yeah, I'll recommend QuickBooks. If you don't, that's okay. Make sure you're tracking all your expenses in that bookkeeping. And then at the end of the year, if you're working with a tax professional, yes and no, then you probably don't. Get started with QuickBooks. If you need help with getting started with QuickBooks, go ahead and send me a message or use the link in my bio and let's talk. But you want to be able to track those expenses so when you do meet with your tax professional at the end of the year, that you can just provide them that, that statement and they can go through and be like, hey, you know what, this is deductible. This is not. Your only job should be is just to track it. Step number 1. Get a separate business bank account. Get a separate business bank account. I'm trying to start a business. What's up, Tabitha? Guys, whenever I mispronounce your name, I'm so sorry. I'm just thinking me of that substitute teacher who can't read your names, but I'm gonna read your question. I'm trying to start a business right now, and I thought it'd be handy to do before the end of the year. Yeah. I don't even know what I'm saying. Yeah, too. How do I have a business? Well, 2 rules. 2 things that you have to 2 rules. The activity you're doing, which is your business, must be for income producing, right? You must be doing the activity in order to make a profit. That's rule number 1 to have a business, right? That's what the IRS considers a business. It's an activity that you are engaged in to produce a profit. If you are engaged in an activity and your primary motive is not to produce a profit, well, you have a hobby. You don't have a business. And with a hobby, you do not get business deductions, okay? The second thing, you must be involved in that activity with continuity and regularity. That means you're doing it you're performing this activity on an ongoing basis, right? You're putting in the work, you're taking training, you're trying to get better, you're out there buying supplies, materials. That's really what the main thing is. If that makes sense. Guys, if I missed your question, I know on Instagram I only have 2 people, so I can read all your guys' questions. But if I missed your question on TikTok, just please answer again. Could wholesale real estate yeah, absolutely. Absolutely. So if you're doing wholesale real estate and if you bought a course to help you to teach you wholesale real estate, you can write that off. Right? And within limits, as long as it's not like over $2,500 or something like that we may have to expense it. What's up, doctor? Okay. But yeah, if you bought courses to help you wholesale real estate, write it off. If you pay for marketing, write it off. If you pay for a cell phone, write it off. But track it. Before you write anything off, it's really important that you track it. So if you're doing wholesale real estate, I really hope that you guys start with bookkeeping. Right? I said it's like every single live. QuickBooks is important. What's the possibility of the amount on W-3 not match the amount on the IR from the so the W-3 is what your employer sends in with the IRS unless you're talking about you have employees, but if you don't, you should receive a W-2. Yeah, you should receive a W-2. Your W-2 should be matched what's reported to the IRS on a W-3. Hello, I receive unemployment. Will I owe IRS when it's time for me to file my taxes? It depends. With your unemployment, did you check the little box that says, hey, can you withhold taxes from my unemployment? If not, then you may owe taxes. But, Nathalia, if I mispronounce your name, I'm so sorry. I'm really sorry. I am so sorry. AA. I'm gonna call you AA because that's your AA. If you started a business in unemployment, that could be cool, right? That could be cool. Sent a request to be in your live video. I just got a request for someone to be in my live video, but that could be cool as well. So that's what's really important too. And AA, I had a video. If you started a business on unemployment, there's a possibility that your business operated at a loss, and you can use your business loss. You can use your business loss to offset your unemployment income. You may not owe any taxes at all. I did a live on this yesterday, and I reposted it on YouTube. So if you want to watch that, check that out. Okay. I'm employed. Oh my god, I got a constipated sneeze. Man, it's like right there. Y'all ever had one of those where it's like, I'm employed full time, but also deliver for Instacart and DoorDash. Can you work with me? Absolutely, I can work with you. Send me a message. What's up? Oh, cool. Can I hire you as my CPA? I'm not a CPA, but I do taxes and all that, right? I'm an enrolled agent. I only specialize in taxes in QuickBooks. Yeah, but send me a message. Definitely, you can hire me. What if you got a job having unemployment? What if you got a job while having unemployment and you report it, but you still receive benefits? Well, you did your part. As long as you reported what you were supposed to report, I wouldn't worry about nothing. Right? I wouldn't worry about nothing. As long as you did your part, you did your part. That's what's important. Could that be an issue during tax season? Not during tax season. It's only going to raise your taxable income. But if you had taxes withheld, you shouldn't have nothing to worry about. What is a employer questionnaire discrepancy between IRS and SSA records? I'm not 100% sure what that means. I wish I did. What's it called? Employer questionnaire discrepancy between IRS and Social Security. I have no idea. I'm going to take a screenshot of that so I can look that up later. Yeah. My screen probably just froze right there, guys, because I took a screenshot because I didn't understand that question, but I want to follow up with it later because I'm curious about that. Yeah, guys, thank you for joining. If you guys missed it, I pretty much covered the difference between, hi Facebook, I pretty much covered the difference between what a tax deduction and a tax credit is. Yeah. I started selling on eBay. Can I write off? Absolutely. Yeah, you can write off your computer materials. As long as you used it for business, you didn't use it for personal reasons. Even if you used it for personal reasons, you just take your business portion, you write that off. You might have to depreciate it as well. Sorry to flood you with questions. You're not flooding me with questions, AA. I'm really sorry if I mispronounce your name as well. So I'm gonna just call you AA. Sorry to flood you with questions, but how would I be able to know if I choose? You're gonna check with your state. So maybe when you log in, you should have some type of like login portal or probably the same spot where you request payments. Look and see if they're talking about like tax forms or tax documents. I would just log into your portal with the state that where you request your benefit from and see if there's some type of like settings or something on the side that says something about taxes. And hopefully that will help. If not, I would give them a call. Are there any benefits for housewives if they have never worked before? I'm not 100% sure. I've not had an housewife. I'm gonna be honest with you, I'm not even sure what a housewife is. Okay, what's a housewife? I'm so sorry. I'm not sure if I did or not. I would check what the online saying. That's corporate LLC for y'all. You probably don't need either, man. You probably just get started. Be a sole proprietorship or get a DBA. So yeah. Can you write off expenses as an influencer? Absolutely. Yeah, just make sure just make sure you're tracking us. I made money, LLC. Yeah. I made money in the stock market this year. Can losses count as deductions? Losses can only count as deductions against your gains in the stock market. So let's say if you had $100 in gains and you had $80 in losses, well, you only pay gain on the $20. Now you cannot use the losses to offset ordinary income. Like let's say if you had a business and you had a business loss, well, you can use that business loss to offset unemployment income, which many of you may be having problems with. You can use your business loss, to offset unemployment income. Now you cannot use your stock market loss to a certain extent, but for the most part, I want you guys to think straight. You cannot use your stock market loss to offset unemployment income. So your stock market loss, you can only deduct it against your gain. Thank you. I appreciate you. AA. I appreciate you. Amazon won't let me open a store under 18 without a license. Yeah, so I don't know. You can't even get an LLC or S corp at the age of. You have to be legally able to. Guys, the reason why you can't get an LLC at the age of like 16, 15, because you have to be legally able to sign a document, and that age is 18. So that's probably why Amazon won't let you. Now, if you talk to your parents, maybe work with someone who's older, sibling, I don't know. It's the possibility is limitless. Endless. Do I retort treasury stock on my bank research for my class? I'm not 100% sure about that question. I wish I did know. Well, I lost. Hi, what's up, Instagram? Thank you guys for joining. I'm also live on TikTok, also live on Facebook. If you guys missed it, I covered the difference between a deduction and a credit. And that's it. Guys, if I missed your question, I know I'm not missing on Instagram because I only have like 1 or 2 people watching. But if I'm missing on TikTok, please answer it again. Ask it again. Can you explain how stocks work? I can probably do that in tomorrow's video. That's kind of a lot. Thank you for joining. What is the best option for an LLC to be taxed? An LLC can, by default. Okay, so by default, an LLC is taxed as either a sole proprietorship or a partnership. If it's just one member in the LLC. So, okay, guys, if you own the LLC, you're legally called a member. I want you guys to remember, you're not called owners, you're called members. I'm gonna say it again. You're not called owners, you're called members. Not owners, members. Members. Okay? You're called members. So if it's only one member in the LLC, you're gonna be taxed as a sole proprietorship. If it's 2 or more members, you're gonna be taxed as a partnership by default. There's nothing you can do about that. Now, when your net sales, when your net sales from in an LLC, whether your partnership or LLC is around $50,000, you want to probably get taxed as an S corp. But if your net income, not your total sales, but if your net income is not around 50,000, probably won't make sense. What deductions can you use as a sole proprietorship? Any expense that you incur in the course of your business to make money. Guys, if I missed your question, just please ask again. I know it's so frustrating that if you ask a question and the person doesn't read it. I know, guys, and I hate to be that person, but I'm trying to keep up. So please just ask again. Like scream it, like put a bunch of emojis, make my eyes see it. I don't know. Sorry if I missed it. I lost $1,000 on stocks. Can I claim that as loss on taxes? You can only claim your stock. Well, I think you can claim up to $3,000 of passive losses. Yeah, LLC or EIN. Well, in LLC, well, it depends. For an EIN, you'll need to open up a business bank account. To open up a business bank account, you need an EIN or DBA or LLC. Right? So most of you guys, if you're just getting started, you can just get started with a DBA and EIN. Because depending where you are, it may be really expensive to set up an LLC. Like in the state of California, you'll pay like $800 a year just to have an LLC. That is ridiculous. In the state of Texas, where I'm at, it's $300 like to set up an LLC. You probably don't have the fun. You may not have the funds to incur those expenses. So if you're just getting started, DBA EIN is just fine. Thanks for all the information. You're so welcome. I don't have a business, but it's about to be possible to get an LLC. I don't have a business, but is it possible to get an LLC to cover gains? You don't need an LLC to do that. You can do that by yourself. You don't need an LLC to do that. How can you buy a car with credit cards? I want to build my credit young. Gosh, I have this constipated sneeze. Oh, I'm really sorry. I cannot help you on credit. I specialize in taxes and QuickBooks. I really wish I could help you, but I can't. What are we talking about? Yeah, we were talking about covered the difference between what a tax deduction and a tax credit is. If you missed it, I'm gonna re-upload it on YouTube. You can catch a replay there. Oh my gosh. No. Thank you for all the useful information. You're welcome for the host. Thank you so much for that follow. What deductions can I use a sole proprietorship? Yeah, my parents are co-signed. I have an installment agreement, but I just decided to pay the actual penalties. Yeah. Woo. If I'm a sole prop, can I still be LLC? Yeah. So by default, an LLC is taxed as a sole proprietorship. If it's just one member, if it's two or more members, it's taxed as a partnership. Can you tell me more about 1099? Yeah. So 1099. So you receive a 1099 if you are an independent contractor. So typically independent contractors are someone who's like contracted for work. So this could be DoorDash, this could be OnlyFans, this could be Instacart. This could be for any company you pay for that they hire you for like maybe like a short period of time, or they hire you as be your own boss. Which means the main difference between someone who receives a 1099 and someone who receives a W-2 is whoever receives a 1099, they don't have a schedule. They don't have like a schedule where they're late, they'll get fired, right? If an employee doesn't meet their schedule time, they're not on worker time, they're gonna get fired. So that's the main thing when you're receiving a 1099. That's the main thing, right? So you'll receive this 1099 by whoever you work for by January 31st. That's when you should receive it by. It's gonna report the total amount of money they paid you. That's gonna be considered self-employment income, which means you're gonna have to pay self-employment taxes on it, as well as federal taxes. You're awesome. Going to subscribe. Yay! Guys, yeah, please subscribe to my YouTube. That makes me so happy. Thank you so much. That makes me really happy. Guys, if you can subscribe to my YouTube, that'd be so cool. I like that. Thank you so much. Any businesses before I actually file for LLC, can you still be touched? Yeah, absolutely. So I covered that yesterday in yesterday's live. It's called startup expenses. I'm not sure if you have the time in your day or your life to watch my video on that, but I did a video on that on yesterday and I uploaded to YouTube. It's the 2020 unemployment tax strategy, and I talked about startup expenses in that video. That's what you're going to want to check out. If I'm a sole proprietorship account, yeah, absolutely. You can be a sole proprietorship as an LLC. I have an LLC, but I have multiple businesses. How do I use that one LLC to cover multiple avenues? Many people have an LLC and they'll have different DBAs under the LLC. So that's one way you can go about it. So just get separate DBAs. If I'm a sole proprietorship, yes, fancy and cute. If you're a sole proprietorship, you can still get an LLC. I have an LLC, yeah. How can sincerely, Jesus, how can the total wages on W-2 and W-3 not equal the IRS amount reported for? I would check with the person who does your payroll, like whoever's doing your payroll reporting, because it should be your 940 form. 941 is your quarterly, yeah, and 941 is your 940 is gonna be your annual. And I'm not a payroll specialist. I have QuickBooks as all my payroll, but yeah, that's strange. But I would definitely check with your 940, your annual. Your 941 is your quarterly, so that's what you do quarterly. But you probably want to check with your 940. I don't know if it makes any questions any easier. DBA. So okay, DBA stands for doing business as. So I'm an LLC, but I'm also doing business as chicken sandwiches, and I'm also doing business as shoes. So doing business as is like, hey, yeah, I'm an LLC, but I'm also doing business as this. I'm also doing business as this, and so forth. It's called a DBA, doing business. So under 1099, can they bind you with contractors? No. If I don't know. They could. I don't know. Okay? But as a 1099, you're not an employee. So you can't, that's like a sticky side. You're breaking up. Oh, I'm so sorry. I'm not aware of the SCA program in Texas. I'm not aware of it in California. I don't know. I'm not 100% sure. All right, guys. 8:47. Is there any more questions before I jump off this live? And how is it that I can have a return and still owe taxes? That doesn't make. If you have a tax refund and you still owe taxes. Unless you owe you could have You can have a tax refund and you owe other federal government debt obligations. Like sometimes people get their return taken because of student loans, or you may owe taxes still because you have there's so many things. But yeah, excuse me, guys. Any more questions? Yeah. So yeah, there are taxes on dividends. Yeah. But luckily about dividends, you don't have to pay self-employment tax, so that's a good thing about it. Gosh, can you run out of food yet? This sneeze, guys, I don't know if you guys have been here the whole time live, but this has been this sneeze. Yeah, so meals are deductible as long as there was a business purpose for engaging that meal. So let's say you're meeting with a client. That's great. Are there taxes and dividends for the reinvested? Not 100% sure. Entertaining business. You cannot write off entertaining business expenses anymore. Also, are there any taxes and dividends that are reinvested? So if you receive the dividends, you receive that as income. You're gonna have to pay that taxes. What you do to reinvest it is what you do. You're gonna track your basis in that. And the company that you're doing, whoever you're doing the dividends through or whatever, they should be tracking that for you. What's up, Sumia? I hope I said your name right, Sumia. Guys, I'm not the best at pronouncing names. Whew. Any more questions? Boom. I got an infection. Yeah, so when I was younger, I punched the table. Thank you for the hearts. And I got an infection. You're great. Thank you so much for your... Whew. I'm so glad I let you down, Tyler. I don't know the question. I don't know the answers to everything. I wish I did. Eventually I will. But I would just hate to give you guys bad advice. That's what I don't. The last thing I want to do is stand here and act like I know what the heck some of these questions are about. Sometimes I don't know what the heck y'all be asking, guys. But even if I don't know, I'm gonna just be straight up with you. I don't know, but I'll get back to you. Thank you. You're welcome for the information. Absolutely. Tsunami it's the giant wave. No, there's someone. What's up, Gluten? And happy belated birthday. There's someone in my Instagram live named Sumia. Tips on how you can get a refund while filing a joint tax return. Well, if you're working with a tax professional, good advice. Thank you so much. They should be running a merit file jointly versus a merit file separate return. And that'll help you. It'll look at both situations and it depends. Shaman 2014. Do you guys have a business? Thank you for all the information. You're welcome. How did you learn everything you know? You're so knowledgeable. Thank you so much. I own a tax firm and I get it all from my experience. So working with different clients. I've been doing my own taxes since I was 14. I'm 26 now. So most of my experience just comes from Can students write off their computers? So you can't. So the cost of your computer goes back to this tax credit, right? So it goes back to that tax credit. So if you weren't here this entire video, you probably want to rewatch this. But let's say you have a $10,000 computer, but so let's say you have a $10,000 computer, right? But the tax credit's only like $2,500 refundable. You can have a $50,000 computer, but you don't get to write it off. It's only what you get that tax credit for. Okay, so I don't feel like I just got that message across. Okay. So let's say the computer for students. So let's say you're claiming a tax credit for, $2,500, right? That's the maximum tax credit. That's the maximum tax credit, okay? So if you buy a computer for $10,000, right, you can only get this amount, right? Just because you buy a $10,000 computer doesn't mean you get a $10,000 deduction or $10,000 credit. It can only be up to that amount. So you can buy a $100,000 computer, but you still only get that amount, right? That's for students. Now, if you're in a business and you buy a $100,000 computer, oh, damn! First of all, Apple don't even go that high. What you doing with a $100,000 computer? What kind of business FBI, CIA, TIC, C4 investigation you got going on? Right. So if you buy a $100,000 computer in your business, well, that's an asset, and we're gonna be able to depreciate over a period of time. Can medical expenses be written off? I had to pay $500 for dental. So medical expenses. So let's talk about medical expenses. So those are back on the deduction side, and that's going to go on Schedule A. Okay. So when you're filing your tax return, you get two options, right? You get to either itemize. You get to either itemize or standard. deduction. Okay. So when you file your tax return, you either get the itemized or you get the standard deduction. So when you itemize your deduction, it's going to ask you things for like property taxes, medical, charity. Okay. And then your standard deduction is $12,400. For 2020, if you're single, just filing by yourself, your standard deduction is $12,400. Okay. So let's say you have medical expenses, what you said, $500. Are you dental? So $500. Right? And you didn't have any property taxes or any charity. So your total itemized deductions is $500. So now you have to choose, do you want $500 or do you want $12,400? Right? So you kind of get that option. And this is a deduction on your tax return. So if you've been here the entire life, I spoke about deductions. Okay? I spoke about deductions and so forth. So you got to ask yourself, we love your content from California. Thank you so much. That's so nice. Thank you so much. So you have to ask yourself, do you want the deduction? You want to itemize or you want the standard deduction? Most people typically go with the one that yields the higher amount. Because let's say our income is $20,000. $20,000. And let's say we take the itemized, right? Let's say we take the itemized deductions. So we minus 500. Let's say you choose the itemized. So you minus $500. Now you're left with $19,500. Right? And you're gonna have to pay taxes on that $19,500. My sneeze. So if you're in the 10% tax bracket, 10%, you're gonna have to pay, what's that? $1,950. Okay? That's if you itemize. Now let's say you take the standard deduction. Right? So let's say you take the standard deduction now. Right? Which is $12,400. Right? So that's gonna give you what? $7,600. Right? $7,600. Okay, so let's say we're still in the 10% tax bracket. Now we're only paying taxes on $760. That's why people generally like to choose the one that yields the higher amount because it allows them to pay less taxes. So yeah, you pay $500 in medical expenses. I mean, you can if you want to itemize, yeah, you can take it, but you're also giving up $12,400. So that's how that works. I hope that helps. Guys, if I missed your question, please answer again. Where do you live? Every week, where do you go? When do you go live? I go live Monday through Thursday at 8 p.m. Central Time. Monday through Thursday, 8 p.m. Central Time. What's up, Scarlett? Monday through Thursday, 8 p.m. Central Time. Do you recommend any books on taxes? Yeah. Yeah, I do. I like this one. What your CPAs and tell you by Mark Cooler. And I like this one, which is Tax-Free Wealth by Tom Willwhite. Those are really good books. Guys, this live was pretty active, and it was pretty active on kind of Instagram too. I just wish that Instagram would let me mirror my live because you guys cannot see the board. What's your tax phone name? It's Duke Tax Online. Duke Tax Online. Thank you. You're welcome. I will never need to use any of this now, but when I need to, yeah, you got it. You're set. Is this example for a single person? Can you make an example of Head of house. So it's the same. I mean, it's gonna be higher. So I think the head of household, like the standard deduction. Let me look that up real quick. $18,000. So if you're a head of household, this number's gonna be $18,650. All right. So the standard deduction, if you're so this is single, and this is HOH, is 18,650. So in this case, with the standard deduction, you make 20,000. Let's say you're head of household. Right, let's say you're head of household, and you have 18,650. Well, that leaves us with what, 1,350. 1,350. So taxes on that is like 135. Guys, I hope that math is right. 20, 1, 2, 3 minus 18,650. Yeah, 1,000. Yeah, it's right. Yeah. Sorry, guys. Yeah, that's right. Sorry, I know my live froze. It said low connection, but we'll let change that beer. Thank you, man. So yeah, if you're a head of household, your standard is going to be 18,650. If we do that correctly, your net income 1,350. Your taxes owed is going to be $135. Guys, gotta wrap it up. If you write down your questions, I go live Monday through Thursday, 8 p.m. Central Time. Sometimes I surprise you. I'll hop on here on a Friday or a Saturday or Sunday. But Monday through Thursday, Monday through Thursday, 8 p.m. Central Time. Thank you for the follow. I appreciate everyone who comes out to these lives. I appreciate everyone that follows me. If you have any questions, I am so sorry. If you have any questions, write them down.